Financial emergencies have a frustrating habit of showing up right before payday, leaving millions of people scrambling to bridge the gap between their current bank balance and their next paycheck. When faced with a sudden car repair, an unexpected medical bill, or just the need for groceries, traditional options historically included high-interest payday loans or risky overdraft fees. In recent years, financial technology apps have entered the market promising a safer, more modern alternative. Among the most popular of these tools is Brigit, a budgeting and cash advance app designed to help consumers avoid debt traps. Evaluating whether Brigit is genuinely better than a traditional payday loan requires looking closely at how both options function, what they cost, and the long-term impact they can have on personal finances. Traditional payday loans have long operated under a business model that many consumer advocates criticize as predatory. These are short-term loans, typically ranging from a few $100s, that require repayment in a lump sum on the borrower's next payday. The primary danger of a payday loan lies in its astronomical cost. Finance charges can translate to annual percentage rates that soar into the triple digits, often exceeding 300% or 400%. When borrowers find themselves unable to pay back the full amount plus the fee when due, they are often forced to roll the loan over into a new one, incurring fresh fees. This creates a vicious cycle of debt where individuals spend months or even years paying exorbitant interest on a relatively small initial amount of borrowed cash. Furthermore, traditional payday lenders usually require access to the borrower's bank account or a held check, giving them direct power to withdraw funds regardless of whether it causes other bills to bounce. Brigit approaches short-term financial crunches through an entirely different structural framework. Operating primarily as a budgeting app with a cash advance feature, Brigit connects to a user's checking account to analyze spending habits, monitor cash flow, and predict low balance alerts. Eligible users who subscribe to one of Brigit's paid monthly tiers can request cash advances ranging from $25 up to $500. Unlike payday loans, Brigit does not charge interest on the money advanced. There are no finance charges accumulating by the day, and the app does not penalize users with late fees if they cannot make the repayment on the exact scheduled date. Instead, users can request extensions or adjust their repayment timeline directly within the app without getting hit with financial penalties. However, calling Brigit entirely free or comparing it strictly as a zero-cost alternative would be misleading. Brigit operates on a subscription model, charging a monthly fee ranging from roughly $8 to $16 depending on the chosen tier. While this flat monthly fee is vastly cheaper than the compounding triple-digit interest rates of a payday loan, it is still a recurring cost that users must pay to maintain access to cash advances. Additionally, if a user needs the advanced funds instantly rather than waiting a couple of business days for standard delivery, an optional express transfer fee may apply. For individuals who only borrow once in a blue moon, paying a monthly subscription fee just to access a small cash advance can become relatively expensive relative to the amount borrowed. When comparing the two directly, the structural advantages of Brigit over a payday loan become starkly clear. Payday loans are designed in a way that profits directly from a borrower's inability to escape financial hardship, frequently trapping families in multi-month debt cycles. Brigit, conversely, is built alongside budgeting tools, credit-building features, and identity theft protection designed to improve overall financial health rather than exploit a temporary shortfall. There is no hard credit check required to use Brigit's cash advance feature, meaning a sudden request for emergency cash will not damage a credit score. Traditional payday loans may not check credit either, but their collection practices and default consequences can wreak havoc on financial stability. At the same time, neither option serves as a permanent solution to underlying financial distress. Relying repeatedly on cash advance apps every single pay period can signal a recurring budget deficit, where monthly expenses consistently outpace income. While Brigit does not inflict the dangerous debt traps characteristic of payday lenders, paying continuous subscription fees while constantly borrowing against future earnings can still strain a tight budget. Treating these apps strictly as emergency safety nets rather than regular sources of income is essential for maintaining financial balance. Ultimately, Brigit is significantly better than a traditional payday loan. It replaces high-interest, predatory debt structures with a transparent, subscription-based model that eliminates interest, avoids late fees, and provides tools to actively manage personal finances. For consumers navigating an occasional, unexpected cash crunch who want to steer clear of the devastating cycles associated with payday lenders, cash advance apps like Brigit offer a much safer and more responsible path forward.